Hey guys, Mike here. So obviously Palantir got crushed on earnings, and it's not nowhere near as bad as you think, but I knew last night, and I'm sure you did too, once you saw in the video crush their earnings, give good forward guidance, that once they sold off last night after earnings, and you saw Trade Desk beat earnings, got absolutely crushed. You know, they made a nice recovery, by the way, but absolutely crushed after earnings. You kind of saw the writing on the wall, and of course, I'd mentioned it's a red day anyway. But, you know, we're going to go through, and I think I've done this in a way you'll like it, because we'll go through what the numbers are, but what I did was I went through the earnings call. It's always fun listening to Alex Karp because he is an interesting individual who drops a lot of F-bombs during earnings calls. And so I went through there, and so as we go through the numbers, I'll show you the numbers, but then I'll let him address those certain segments of the business so you see, you know, what he's talking about, what the issues are, what they plan on doing for the future as well, and kind of where they're heading, okay? And so I think you'll like that. I tend to like it that we don't just have to hear me talk about numbers, okay? So if you're getting out of it, hit the like and subscribe button for me, guys, and let's get right into this. And starting off Palantir's chart, this is what I kind of warned about Sunday in my video about how tech stocks are just out of fashion. Even if you report perfect earnings, there's a good chance you're heading south. And you can see they gap down. There's a support right there, as you can see. It's not far below us, around 1075. That's IPO support, by the way. That's when they first came public. And getting into the earnings is nowhere near as bad as what you would think it would be, right? I mean, you got total revenue growth for the fourth quarter, 34%. U.S. commercial revenue growth, 132%. Commercial revenue growth, 47%. Overall, adjusted free cash flow of $104 million. Adjusted operating income, $124 million. And of course, the big concern, which we'll get into as well, is the government revenue growth, only 26%. And just looking at the overall year of 2021, it was a pretty good one. I mean, you're looking at 41% total revenue growth. U.S. commercial revenue growth, 102%. We're going to break that down even more into overall commercial. Adjusted free cash flow, $424 million. That's a 28% margin. And then, of course, again, we're going to get into more detail on this. The government revenue growth overall, 47% on the year. And of course, looking at total revenue annualized, you can see nice growth here, big growth from 2020 to 2021. And then total revenue by quarters, you can see it's increased every single quarter since 2020. And then looking at the focus on customer growth, right? This is the big one. You know, you're looking at from 139 in 2020 to 237 in 2021. It's a 71% increase. And so now this is where Alex Karp comes in at to address the growth and how they plan on growing. Because remember, they didn't even have a sales force. Then they hired a bunch of people at the end of 2021. So you're just starting to see the fruits of those people's labor, but he's going to go into what the plan is going forward, especially with the sales force team, which is critical for this company.
So obviously that means we think we can get lift from hiring salespeople. We're doing that aggressively. I think we have about 150 salespeople now. We're in the market to hire aggressively across Palantir. Honestly, mostly not salespeople, because we believe we live and die based on our ability to build products of tomorrow, deliver today. But we're going to hire in the range of 200 people. Hiring and getting value out of them are two different things. And so I think one of the things that, you know, we will see going forward is how do we play these salespeople so that we can get as much lift from them as we're getting from the product itself. And we're at the beginning of that. And so it is the people we've fully indoctrinated, or as normal people might say, trained, are effective, but we've never done this before. There'll be that's a process. We're also looking at ways to learn from other companies, but that's going to happen over the next couple of years. I think the primary driver of revenue in U.S. commercial this year will still just be the way in which America, the IT organizations are actually beginning to request, without knowing Foundry sometimes, what Foundry offers.
And so that leads us into the overall commercial revenue. And as you can see right here, you know, you're looking between 49 to 147 customers year over year right there. You see the quarter goes from 19 to 47%. And then breaking that down even more into U.S. commercial momentum, this is where the momentum really is, going from 72% to 134% through the 4 quarters of 2021. Net dollar retention of U.S. commercial, 150%. You see the customer go from 17 to 80, 371% gain there. And then looking at U.S. commercial revenue, you can see right here, obviously it doubles every single year. And he said in the call they think they can double that again this year. The problem comes, as he'll address, in non-U.S. commercial revenue, right? So you can see the big difference in growth right there from 7% to 22%, from 32 customers to 67 customers, which is much slower than what they did in the United States. And so this is where Alex Karp comes in to address what's going on outside the United States when it comes to commercial growth.
And so Europe has been slow for us last year, which is one of the reasons why, we are only at 41%. Last year, and growth would be even higher. Europe grew, if you include SPACs, at 9%, so slightly above what's probably inflation. But there we're taking the opportunity, believing there'll be a handoff from USG to US Com to Europe to rebuild with some very, very strong salespeople who've come from the best companies, believing that that's an environment where we can really do that. So, there's two ways to look at this. Just on that angle, you could say, well, what could you do to gas charge America? We're working on that, and very, very aggressively, and most of our sales hires today are focused on that. But there's another more long-term thing. If we're right that the world wants Silicon Valley the way it was, meaning a handoff from government to commercial to the rest, commercial U.S. to the rest of the world, and with each one with a lag, America to Europe, 18 months. The rest of this company only has to grow, everything besides Europe, commercial 38% to get 30% growth in aggregate. So getting Europe to track better, both from a handoff of what happens in America to Europe and with more conventional sales approach, is kind of what we're looking at getting done this year and see the fruits of it next year.
And this leads us over into government revenue, right? And so you can see right here, this is one of the big concerns in the call, was going from Q1 growing at 76%, and you see it decline every single quarter because obviously they're focusing a lot more on the commercial side. You can tell that. But then you go into the customer count, and you can see in Q4 2020 it's 90, and Q4 2021 it's 90. And one good thing to really see here is the one thing they get beat up the most on is stock-based compensation. You can see in 2020 it was 1.27 billion, and then in 2021 at the end it was 778 million. So it continues to trend downward. And this is when Alex got a question from an actual investor like us to answer about the stock-based compensation and how they're going to handle it going forward.
There's the how are we comping people? And there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times. Bad times mean strong finances internally, and that means at some point you have to be GAAP profitable. You can't be GAAP profitable if you're diluting people or correctly. Your stock-based comp is totally is not in conformity with other companies. So you're seeing a normalization. This will change. It will change in the relatively near future. It'll be linked to other things that we believe are important for Palantir.
And taking a quick look at the balance sheet, one thing he talks about in the call, and it's true, right, is the amount of cash they have on hand, right? 2.3 billion. So that was up. And you just look at the total assets, almost 3.2 billion in assets. Meanwhile, you look at the debt, right? I mean, they have enough cash on hand by itself to cover, 4 times total current liabilities, 2.5 times total liabilities. They just don't carry debt like other companies, which is a very good thing going into a higher interest rate environment that we're going into now. And something else to look at is the total remaining deal value they have left from all the contracts they've already signed increased to 3.8 billion. This is a 35% increase from the prior year period. And also that doesn't include $2.8 billion in government business as well. They've already been awarded. And this leads me into the last clip of Alex Karp. I like when a CEO at least admit when they've made a mistake, because you rarely hear that, right? And so he's going to tell you the biggest mistake Palantir made and how they're trying to rectify this now. And I think you're seeing this as well.
One of the things we failed at, honestly, is capturing the value of what we've done. Most of the products you would see on a map in an industry, any company, they're delivering things we built 7 years ago. We failed in capturing the value of that. We're not going to fail again. We failed in capturing the value of that because we were selling to IT and selling to people in an adversarial way. And we were 7 years, 8 years ahead, but 8 years ahead, but they can't actually interact with you. That's not the right way to do it. And we're not going to do it that way in America. So we're building a specialized sales, which means it will take longer to get it to work because we're working it. And in Europe, we have it differentiated on the idea that, so if you just look at the raw numbers, if you look at like, where we're investing in, it's like sales hires, very high-end salespeople in Europe, and then the rest is just like the best tech engineers in the world, because we know we get them, we retain them, and it's just very differentiated.
And so it's definitely good to hear him at least admit that and realize they made a mistake, because obviously you can't fix something if you don't admit you actually made a mistake. And so I think that's why you saw the hiring of the sales force, the continuing hiring of the sales force, the fact that hopefully he's right about Europe. He went in detail on that a little bit, about how they really got to hire the sales force, start pushing in Europe to increase the numbers, because the U.S., obviously, on the commercial side is the engine for them, right? And so just trying to push this into other countries. And so that is going to be a focus. I'm glad to see the stock-based compensation is decreasing, and him saying, yes, it will get normalized, because he recognizes you have to be profitable on a GAAP accounting standard. You can't just sit there and keep losing money. It's not going to work. And so, that's huge. The biggest ones, he really talk about that much, but it's the government revenue, the decrease per quarter. And I know they have a lot of, stuff booked in there, but, this is one of those things, and we kind of knew this was going to happen. That was the big complaint. Too much government revenue, not enough commercial. Now all of a sudden they're pushing the commercial. We knew the government was going to shrink, and of course now everybody's complaining about that too. So, there has to be a balance, and so we'll see, where that lies out or what happens on that. As far as any other concerns, really didn't see it, besides the fact that we're in an environment that literally hates tech stocks. It don't matter, because NVIDIA is a great company, and they're a high multiple company too. And guess what? They're getting hammered for it, right? It didn't even matter. They had great earnings and blew it out the water. That's the way it is. If you're high multiple, any of that kind of stuff, high growth, you're getting hammered right now. And so hopefully when that turns around, I hope it's going to happen anytime soon. Can't imagine it's going to happen before the first rate hike, but we'll see. And then, of course, it didn't help that all the reports came out about Russia and Ukraine, and who knows. I told the members, I don't know what's going on over there. I have no idea who's lying, who's telling the truth. So if you happen to live in that area, hit us up with some links and everything, and let us know what's really happening, because I don't know. I mean, it's just the news is all over the place on it. So is Russia withdrawing troops? Are they adding troops? All that stuff. So anyway, that's really affecting the market too, because nobody's really worried about the war part. They're worried about, I hate to say this, the oil, right? Because Russia accounts for they have a lot of oil, right? They account for a lot of it in the world with their production, and if that's interrupted in any way, shape, or form, because the demand for oil is so high right now, people are really worried that's going to send oil over $100 a barrel, and that's not good for anybody, okay? Because it affects everything. And so, and I hope nobody goes to war. I don't want anybody going to war. Hopefully they settle this out in peace and whatever the heck's happening over there, okay? So anyway, I hope you guys got some out of this. Hit the like, subscribe if you did. Let me know what you're doing on Palantir, and I'll see you guys this weekend.